The first quarter of 2021 was a quarter where Americans really felt like that light at the end of the tunnel was actually within reach. The vaccinations for COVID were progressing at a rapid pace, economic data was improving, and Americans really started to feel another sense of normalcy. There were many investments in the first quarter that felt that light at the end of the tunnel. The first is the equity market. We saw global equities rally at a rapid pace in the first quarter. And if you look at this chart, you can see that the makeup of the rally was a little bit different than investors have been accustomed to. It was led by those cyclically oriented areas of the equity market. So within the US, it was the value stocks, those tied to an economic recovery. Global equities, international equities also rallied, but from a sector perspective in the US, it was really led by energy, which had its best quarter on record, financials, industrials, all these things that are going to benefit from better economic growth. The commodity sector also saw a significant rebound, and then the dollar rebounded as well on the back of better economic outlook. The one area of the market that did suffer was the bond market. Investors in the bond market felt what true interest rate risk is. While most fixed income investments declined, the biggest laggers were those investors that had bond investments that were long-term bonds. The short-term bonds, as well as some higher-yielding credit, offered modest returns for investors, but on balance, the broad fixed income had a disappointing quarter for investors.